Hey, everybody, it's Friday, and welcome back to another episode of the 6-5 Podcast, episode 252. Daniel Newman and Patrick Moorhead here. It's been a big week, Pat. We had a long travel day yesterday. How you doing, buddy?
I'm doing surprisingly well, and I have no idea why. I came back from Davos, and I was just an absolute train wreck. I'm a little disappointed on the gym situation. Gyms that open up at 7 or they have no equipment in them. And right now I've got a bum shoulder. So I have no idea why I'm feeling really well. I did not sleep on the plane either on the way back.
Yeah, there's a rumor that I sat next to you just by happenstance. So the happenstance for everybody out there was I happened to have my EA talk to Pat's EA, and we happened to schedule to be on the same flight, and then we happened to put our seats next to each other. But it was a total accident by happenstance. Yeah. So, yeah, it was really nice. I did sleep, not as much as you. I slept about 2 hours early on the flight, then maybe dozed off for another 30, but it was like 10 hours. It was a long flight. American Airlines, fix your damn Wi-Fi. You guys are awful. Like, $35 for like 5 connected minutes across the whole flight. And I spent more time trying to get connected than actually connected.
Yeah, it was pathetic.
You guys suck. I just want to point that out, Pat.
I know. Well, they didn't get anything done. Like, you can't get anything done. I wanted to grind for 10 hours and I couldn't. So
it's amazing how dependent we are to be online to get work done now. Like, there was an era like that wasn't even a thing. Like, you would like have stuff to work on, and you'd like get on the plane and you'd work on your stuff, and you'd be disconnected, and then you'd reconnect at some. And there was obviously a point before that where you had your chicken scratch. You were there for that. I don't think I ever worked in that era, but I mean, anyways.
Well, in that era, what happened is you had Outlook, and everything was synced. So you had all your files that were on your PC. And by the way, if there's not a better proof point for on-device AI, I mean, I think it'd be great to have, DeepSeek distilled on my system, and then I could have downloaded all the documents beforehand for Salesforce, Broadcom, Marvell, HPE, everything.
Yeah, it's great. But hey, man, we got a busy week. We had a lot of fun. We covered a ton of ground this week at Mobile World Congress in Barcelona, Spain. The 6-5 was there. We had a lot of interviews. Check out and definitely follow our 6-5 account and see them. I mean, we had good conversations, Pat and I together. We had good conversations independently. Pat had a banger of a sit down with Intel's product CEO, Michelle Johnson, and Whole House. And we also had a number of founder of Palo Alto Networks. And then we had a bunch of off the record type conversations with CEOs and executives. And we'll get into that more in a minute. But we also have, there was big news this week from Salesforce. We're going to talk a little bit about their 2DX launch. We're going to talk a bunch of earnings. And then we're going to have a little fun, and we're going to go a little off the script here. We're going to do some tariff talk. We really cannot separate what is going on right now in DC and what is going on in tech. And so Pat and I are going to try to, end the show today by breaking that down for everybody a little bit. And then Pat's going to probably go on like 10 TV networks and talk about it today. Right, buddy? You doing any TV?
Only one. Yeah, I had another power lunch. And hey, Bestie, we've been on for 5 years, episode 252. That is crazy.
5 years. We've been through it all. Market ups, market down, tech innovation, tech deceleration. When we started, chips weren't cool. Now chips are super cool. We've gone through it all. And you know what? We appreciate every one of you that have been part of our community throughout this whole time. All right, so let's tee this baby up, Pat. You wrote a great post yesterday. You were cranking, pushing stuff out, and you did your whole MWC teardown. Why don't you give everybody the quick, what did Pat think, see, and feel this year at Mobile World Congress?
Yeah, it is funny. I put out what I thought was a very thoughtful banger. I get like 4,000 views on content. I put out trash, like what I ate, how many avocados I scarfed down. And it gets like 25,000. But anyways, so here were my takeaways, and bear with me. So, and this came again from the distilled conversations on the record and off the record with folks. Definitely a heightened sense of optimism. This industry has been through its challenges. If you look at the valuations of carriers and carrier equipment makers, I mean, it's absolutely in the toilet. There were some people who took advantage of 5G and some who didn't. But a real sense of optimism around this AI at the edge, the generative AI in the physical world. If it sounds like we've been here before, we have. We called it Industry 4.0, and it is basically industrial IoT. But there is a belief, and I do believe that there's a higher likelihood that the industry will succeed on this than it did in the prior generation. Also, kind of a pivot, it seemed like, related to 5G. A lot of talk there was in consumer services before. I think we're still waiting for that next killer 5G consumer app that kind of never came. And if you remember the thesis from 3G to 4G, 4G to 5G was, hey, look at all the stuff that 4G brought, like Instagram and Spotify, and we'll have to wait for the developers to jump on that. But as we saw, the challenge was you needed to have some pretty hardcore APIs plugged into every carrier to make it work, and developers weren't too excited about the idea, if you're a global company, writing to 25 different APIs. Of course, there's a lot of companies that have come in, and a lot of industry organizations like GSMA for these APIs. But what we're seeing now is really a pivot to the enterprise, and which I just thought was fascinating. You've got carriers moving into enterprise. You've got enterprise networking folks moving into the enterprise. You've got carrier equipment providers moving into more enterprise networking. But listen, we've got the SA core, and I think it's time to cook. We've got the APIs, and I think compared to 2 years ago, where we were talking about hypothetical use cases that an SA core and stuff like bit slicing could provide, we actually saw them, like real live enterprises using 5G advanced services through an SA core to get stuff done. And now it's time to scale. Final two things to make a long story longer. A lot of talk about GPUs at the edge or accelerators at the edge, right? And that can be an ASIC GPU, a CPU with an accelerator to do some of this heavy lifting. Have we had GPUs on the edge, accelerators on the edge? Absolutely. Could they run generative AI inference? Absolutely not. So I will leave it. I will leave it at there.
Yeah, I mean, it was a definite pivot in sentiment. The overall consensus from the executives we talked to across carrier service providers, enterprise infrastructure companies, and then of course device makers felt a whole lot more positive. We had some really good conversations. Like I said, a number of them were off the record, but there is a sense that the edge and the symbolic relationship that it needs to have with the cloud is returning to prominence once again. There was kind of this period of time where I call it like the edge in terms of the telco edge, kind of being looked at as a bit of a dumb pipe. And everything was kind of thought to be done in the cloud. We saw that DeepSeek moment where, again, there was a lot of misinformation in the DeepSeek moment. But one of the things it did really start to emphasize is what can be done on a device, what could be done on a PC, what could be done closer to the edge, what could be potentially done branch versus AI all being built and delivered out of the data center, which makes sense, especially on the training side, but doesn't really make sense when you start to scale out inference. And if you heard Jensen's CES keynote where he talked about physical AI, AI is going to be a continuum of really bringing smarts outside of the data center. This is really, I think, what Cristiano Amon had meant when he talked about the connected intelligent edge. I think what they're doing with, is it Dragon Wing, Pat, is really interesting. In particular, we talked about this on the show last week, but really the idea, and this really came to my head as I was having conversations, is this this continuum of data that needs to be captured and processed at the edge that's going to be important if we're ever going to really have true autonomy in things like vehicles or in really the intelligent cities that, as you said, Pat, in Industry 4010, that we heard a lot about that we didn't really get, is going to come down to figuring out, and it has to be done at lower costs. And this is why I think companies like Qualcomm are more interesting, because NVIDIA stuff is all super high-end processing, the humanoid robots, autonomous vehicles, sure. But what about the data coming off of an oil field or a farm or a smart city or a manufacturing plant? And then, of course, this is where the Ericssons and Nokias and what they're sort of doing with their enterprise pivot makes sense, is they're in these places, they're providing fixed wireless access, they're giving 5G. That dumb pipe becomes a really important, meaningful connectivity solution for the edge. And really, despite 5G's long in the tooth, it really hasn't been long in the revenue tooth. We're really just starting to see that happen now. So that's my take. It was a good time out at MWC. Pat, let's hit the next topic. We did sit down with Jeff Amon, the head of industries and telco for Salesforce at MWC. Had a great combo. If you didn't check it out, go check it out on our 6.5. But Salesforce was busy making a bunch of announcements this week. And one of the big one is, let's go back a bit. This is a company in a massive transition. We talked about their earnings recently. We talked about sort of growth had really slowed in core business, but where growth hadn't slowed is in its data cloud and in its Agentforce. You're talking thousands of people that are companies that are signing up to use this. You're talking about high growth rates, close to around triple digit growth rates of their data cloud. It might even be higher. I actually don't have it memorized, but it's really high growth rates. And this is all about that data alignment to be able to deliver on agentic. And so this is a company that realizes it's going to need to pivot. It realizes that the future is going to be generative abstractions. It's going to be coordination of agents and orchestration. It's not going to be static, rigid, difficult to use SaaS software. But like every business, it needs to make its transition. And we've done a lot of work on this. We did a big study looking into the economic impacts that could be saved through agentic AI. And we've identified that it could be like in the range of $6 trillion in the next 12 months or so. And this is because companies can put a lot of what I call the middle, Pat, like the middle of the org, things that are kind of heavy, slow, gelatinous parts of an organization that don't necessarily have critical value. And I know that's always really hard to say about human capital, but in many ways, we got kind of a lot of, I heard this a little bit about people moving bits of data around an organization, like how many people take a little bit and move it to another person and move it to another person. This kind of role is what an agent will be perfect at. So, Salesforce basically with 2DX, they've got these proactive AI agents. That's what 2DX enables. They're working autonomously on business processes. So meaning you need something done, this agent can do it. There's a lot of kind of like, how good is it that's still running through people's head? Like you and I kind of had that whole, like, it ain't going to replace salespeople. I mean, that's for sure. And actually Salesforce has admitted that by hiring 2,000 salespeople to sell agents. But I do think when it's like, needing to, a lot of things we do, Pat, we process a video and then we want to create a tweet about it. Like, could that be done largely autonomously? Yeah, I think it could. Or you get a new sale, could that invoice and that follow-up interaction, can those things be autonomously programmed? Absolutely. They're also really focused on kind of this DIY versus Salesforce, meaning could you do it yourself or using Salesforce? And they're continuing to really focus on giving both low-code and pro-code optionality to people so that, developers can build more complex agents, but also companies don't need to have a big developer group to get this done. The App Exchange is the marketplace. This is, marketplaces are always going to be super important. Not all agents are going to be built on Salesforce. Salesforce has a big partner ecosystem. Wanting to plug in agents that can orchestrate across the org is going to be something of focus. And, there's just some other stuff around developers and ecosystem. But, I think right now, Pat, my feeling is we are getting closer and closer to this agentic moment. It's not going to happen all in 2025, but companies are really meaningfully looking at where this can drive efficiencies into the business. We see it, multi-trillion dollars. And I think Salesforce has been really aggressive to make this pivot. And I think they have to be.
Yeah, so not only did they bring out information at TDX, also Morgan Stanley conference, they kind of gave even a deeper dive. I think maybe stuff that would be even more interesting for you and I. So, for instance, they talked about 5,000 deals in Q4, 50% resolution rates in pilot sectors. Cost savings of $7 to $9 per interaction, which I thought was pretty interesting. And there's this thing called universal credit pricing, which replaces the conversation models that I thought was interesting. It's called 2DX, but maybe it should be called Agentforce 2.5, right? And in this world of compressed acceleration and everybody trying to one up each other, here we go. I did find it interesting that at the same time, Mark Benioff was putting out tweets about this. Microsoft Satya Nadella talked about how it was using its agents. He, personally every day he's using it as a CRM, and he's not using Salesforce or even Dynamics 365. So this spat between DIY and leaving the driving to Mark Benioff moves forward. So from a targeting perspective, right? Target audiences here were enterprises, developers, and admins, and partners. Right, for enterprise, it's all about automating workflows across customer service, HR, and supply chain. For developer and admins, really, it's leveraging their ecosystem. And then partners is obviously making money via this new agent exchange. And last comment I'll make, and I really like the Salesforce product discipline, product management of here's the problem, right? What problem are they trying to solve, right? Labor shortages, operational efficiency, integration complexity between low code and lots of code with some of these pre-built integrations. So all in all, not a step function forward, I think, which is why it's not Agentforce 3.0, but 2DX, but definitely a step forward, and should give Microsoft, ServiceNow, Oracle, Adept, and UiPath something to think about.
By the way, did you see? I mean, this is really interesting. Did you see, like with Doge, finding all these HUD software licenses?
Yeah, it's pretty wild. To be expected, right?
I mean, but like one of the big ones, I mean, I'm a huge fan of ServiceNow, but I think the number was like, it was 35,855 licenses, and they were using 84. Right. There were 11,000 Acrobat licenses, and they were using 0. I mean, geez, wow. Okay, sorry. I mean, step tangent from the reality that we're in on this show, but God, my God, dude. All right, let's talk Broadcom, man. I mean, they absolutely smashed it, had a huge reaction after the bell, but that's kind of tempered today, only up 3%.
Yeah, so just kind of by the numbers, right? EPS beat by 6%, revenue beat by 2%, but it was the guide and the future comments that got everybody super excited. I mean, listen, revenue up 25%, non-GAAP EPS up 45%, AI up 77%, infrastructure software, a lot of VMware up 47%. Pretty awesome. But in the end, it was all about ASICs. Okay. And these are the competitors to GPUs that are typically higher efficiency, lower cost, and a little harder to program, particularly if you are locked into CUDA. So couple questions, right? That analyst interactions was all about the confidence in the future growth. And if Hawk rattle off a bunch of future wins that they haven't baked into the financials or the forecast. It was funny how little conversation there was about VMware, right? And if you remember, the past couple quarters, half the call was dedicated to VMware. A little bit of talk about pull-ins, and Hawk said, "Hey, no material timing effects that's going to impact Q1s or Q2." And I think, net, it was all about confidence in future growth in their business, which, by the way, was in sharp contrast to what we saw with NVIDIA, AMD, and we're going to talk about Marvell.
Yeah, thanks for leaving that out there. Look, everything was really tidy. This is a company that has its strength and its diversity. It has the ability to take and lead in a direction that's future forward, but at the same time, their real ethos is always sort of about being able to support a product and a customer. And that sort of might sound a bit in contrast to how the market reflects it at time, but in reality, they don't tend to want to compete. And so you look at like Apple moving away from basically everyone, but in actuality, the partnership between Apple and Broadcom has deepened in a lot of ways, and that's been announced. You look right now what's going on, NVIDIA and Broadcom have a really important partnership. I really do think that Ethernet will be the scale. You can call it an Apple Android thing, but I think in the end, the AI data center scale will be built on Ethernet, not on InfiniBand. There will be its applications for it, but that's just how I see the future. So that'll create this really important symbiotic relationship that's going to exist, even if they are GPUs. Now, of course, there's, I think, a lot of enthusiasm about the XPU business. It's not really very big yet. I mean, that's kind of one of those things that like people are kind of, I don't think the actual XPU part, I think the total AI business is like 4 billion now. And I think the, 4 billion for the quarter. I think it's bigger for the year. It's like 16, but I think like 75% of that's still networking.
Yeah.
I think, the vast majority of that number is not the XPU. So a lot of people, when people like you and me start kind of pointing out that the XPU may or may not be a non-factor, may have a real competitive posture at some point to NVIDIA, people kind of want to throw cold water on us about it. And I just keep saying it's not a zero-sum game. It's going to be both, okay? First of all, we know that accelerators are going to show up in a big way at the edge. We know accelerators are going to show up in a big way for hyperscalers that want to control their own destiny. They're going to want to build their own chips, build their own network infrastructure. We're already seeing this happening. This doesn't mean that they're going to just not use NVIDIA, though. That's like the thing is like everybody wants it to be one or the other. That's not how it's going to work. It's going to end up being both, and there's going to be a really big market for it. And I see that happening over the next few years. And that's something that the investor in Broadcom should be really encouraged by is this is a net new revenue stream. They're building for multiple hyperscalers with more on the horizon, multi-generation build-outs. This is something they talked about. And expect every generation that these commits, they're going to get a little bit bigger. And then you look at what they've talked publicly about co-packaged optics and memory, custom HBM. Now we know Marvell sort of led first, or at least came out first, but you can absolutely be sure they're going to come out and they're going to build that as well. Then you start adding it all together. Then you take mainframe software, VMware, the core chip business that they've had for a long time, everything, PCIe, network route switch, back of the rack, front of the rack, all that stuff. And that's really stable business. And most of the time they tend to have, like with SerDes, where they have like IP control and they cannot be actually encumbered by competition in that particular area. So they end up winning every design. So anyways, a little bit like Qualcomm does on certain parts of the phone. So it's a really great business, great results, as expected. Market is just in shambles. And when we talk tariffs, we'll talk about a little bit more about why it's in shambles and why these things aren't up more. But it was still a good freaking quarter. Like, God, people like buy this.
It's interesting. It's interesting how the market has kind of wavered, right? It was up big time, and it's up today 6%. Maybe that,
Is it 6 now? It was 3 a little while ago. I think when I started. I think it was 3 when we started talking. So,
okay.
Hey, Hawk, Charlie, take note. 3. It was 3 when we started, 6 when we finished.
There we go.
Anyhow, so let's move on to Marvell. That's the sort of, you and I have both talked a lot about Marvell as the alternative. Marvell had a strong, it had a strong quarter. It had a triple beat. I mean, by all, I'm going to go really quick and get to the end here. Sometimes it takes me a while, and I like to rattle on about things. This was a whisper number miss.
Yeah.
The miss was a whisper number miss. So they came up above the sort of consensus guide with a beat. But the delta between that beat and the whisper number was substantial. Stock fell like 15%. It's closed down almost 20 the next day. They had 62% year-over-year growth in their whisper number of 1.875, but the whisper on the street was 2.1. So it was like a almost 10.5% miss on the whisper. And this is basically people are saying that, yes, you've gotten into AI and by the way, look at their business, AI data center, every other part of that business. I mean, they have completely made the pivot, and they have not been shy about this. This is not like they will not be insulted if you say this, but their business pivoted to this. So now they've retrained the whole market to look at their whole company as an AI data center play in many ways. And so people want to see that number growing more quickly. And this is that sort of push and pull about how fast AI infrastructure is growing, how fast are XPUs growing, how fast are non-InfiniBand, NVIDIA solutions in and out of the rack growing. And Marvell is supposed to be the other biggest winner here. We know about AWS and Trainium. We know they had some other builds that are out there. What kind of scale, what kind of growth, what kind of utilization? And to some extent, I think the biggest polar difference between the Broadcom and Marvell is Broadcom kind of gave this visionary number and guide that they like, this is just getting started. That was kind of feeling like, oh, this is just getting started.
Yeah, and they also hinted about these, 2 other design wins that aren't even baked in to the financials. That was a difference too.
Totally. And then
Apple and ByteDance, right?
Correct. And we know ByteDance might not make it out the other end, unfortunately, due to China-US ongoing flipper flabber. We'll talk about that a little bit more later. But we know Apple's out there. And the thing is we know that every generation to generation, these designs go back up for bid. I just think there's this sense in the market that Broadcom is winning the bigger multi-generation, and they have the proof point with the TPU. Marvell has to prove that it can win the multi-generation, win the volume, right? That the ones they do win come out in volume. They're getting some, and by the way, it's not just XPUs. They're getting some, data offload parts, smart networking parts that are related to AI as well. But those aren't the volume, and the numbers are just not as exciting to people, and it's just not as much of the trend line. So, Pat, I think the opposite, reaction wasn't in this quarter. It was a miss on the whisper, and it was sort of a miss on providing that market confidence that these XPU projects are going to scale. Same fate AMD faced, by the way, just kind of not giving that certainty of what's ahead. And the market right now hates uncertainty. And I'm going to say that a few more times before this episode's over.
Yeah. So, I'd like to say kind of they got AMD'd, but kind of none of it makes sense, right? I mean, all-time record, Q4 record Q1 guide, right? Great execution, 20% sequential revenue, Q3 and Q4. And, I think investors just thought there was something else in Q1 that, a company like Broadcom delivered. I mean, they're still, when you look at growth rates, they're still the only company that's grown more than them has been NVIDIA, right? And it appears that they are on that 20% on track to get that 20% share of that $75 billion data center that they outlined at their AI day. I was like looking at the sentiment of the analysts, yes, I'm using Perplexity to help me with that. But it's so funny. I don't trust it. So I went in and I read the transcript. But, I think on the positive side, data center growth, right? How could that not be? On the negative side, or she had Barclays questioning near-term Amazon ASIC constraints, characterized at high watermark expectations. Cantor Fitzgerald called the guidance conservative, suggesting that Marvell was in the penalty box until visibility improves. And Vivek Arya, right, kind of highlighting 30% year-on-year decline in enterprise networking, which again, I think came down to industry inventory digestion, but also that this enterprise market is still, not exactly banging it out. So, all in all, I have a great quarter and a great forecast, but the market, they just wanted more.
Yeah, I think that's absolutely right. Unfortunately, it's insatiable right now. Buckle up, pull up your pants, wear your suspenders. And if you're not up for some volatility right now, go to cash, because it could be really ugly. But I always say that out of all that sort of typical these phases of ugliness comes the best opportunities. Anyone that knows from buying and again, it'll depend on the stimulus and the bets. There's so many things at play here, but all right, let's move on, buddy, to HPE. This was another really interesting print.
Yeah, it was. They're down 15% today. Getting hammered out there. They had a slight beat on the revenue side. They missed on EPS, but I think the biggest thing is they were below expectations on the next quarter and for the year, not only on revenue but also on non-GAAP EPS. And I think this just demonstrates kind of the lumpiness of this AI market here. There was a lot of discussion, either cited or non-cited on, the Blackwell transition, right? It was an issue, right? And that's driving not only some revenue challenges, but also some profitability and inventory challenges out there. And, if I stand back and kind of look at kind of how they did, order growth, double digits across multiple segments, GreenLake, 41,000 customers, $2 billion in subscription. So a lot of positives here that I don't think made it out here, but I think a lot of what we're seeing with HPE is a combination of expectations management, but also the challenges of working in this this AI economy.
Yeah, are you handing me the mic?
I'm handing you the mic, bestie.
Thanks, buddy. This is another one that's just super guidance driven. I mean, they beat on revenue. They barely missed on the bottom. I mean, barely like a penny. I get it. A miss is a miss is a miss. But it was very, very close. They had great growth of server orders, up 29%. Again, people want that to be like 275% right now. This is kind of is AI booming or is AI booming, like kind of thing that everybody's got going on. But they saw their AI systems orders doubled. I mean, they got 8.3 billion of AI systems on order. But the stock dropped 20%. And look, again, it wasn't even a whisper number. This was just a straight guide miss. And right now, you can't miss the guide. Literally, you cannot miss the guide. Nobody cares, unfortunately, right now what you've done. They want to know what you're going to do next. They basically came out and said, we're not going to hit revenue. We're going to miss by somewhere between 200 and 700 million next quarter. We're not going to hit the EPS for either the full year or the quarter. They were very sort of uncertain about tariffs. And we talked a lot about this week, and we're going to talk more about it in a minute. But, the unknowing, the non-certainty of kind of where they can manufacture, is creating some consternation, and it will. It's going to be friction for a while. The 2,500 job cuts, actually, I think the market will like that. As much as they don't like a lot of things right now, the market likes efficiency. This has been a turnaround key. I don't know if I would have actually announced it at earnings. I might have waited a minute, let the sell-off happen, and then come back and then announce it, because people seem to like this. They shouldn't. It's not a good thing. We don't want it. But at the same time, like, if the company can be more efficient, raise its margins, get closer to its EPS through cost reductions, that's part of the role a company has to play. I expect them to do that. The sell-through of the servers and inventory was a bit of a challenge. And of course, seeing Supermicro not capitulate, apparently getting through their little audit and then staying listed. I think there was a big opportunity had something gone the other way for Supermicro. I think amazingly, because like I said, I fall on my sword. Like, I don't understand why a big five accounting firm would have fired them if there was nothing going on. But there's a lot of gray matter here. There's not a lot of regulation and ability to regulate. And I tend to believe the accountants and lawyers of these big corporates are smarter than the accountants and lawyers at the SEC. So, I think that, there's a lot of ways you can kind of move things around to get things done. Pat, in the end, it's going to be, maybe the reset here, bring it down a bit, beat next quarter and get back to growth. During this AI growth period, though, if you're a company that's selling AI solutions, AI systems. Oh, and one other thing, by the way, great ARR growth. They've surpassed $2.1 billion of ARR, 45% growth. GreenLake is working. Like, the ability to deliver as a service some of these AI solutions might be one of the biggest and most compelling differentiators that HPE is going to have. So, dude, we are absolutely tearing it up today.
We are. We're on point, man. You and I should be jet lag, death. I mean, it's close to the end of the day in Spain.
We may actually be done not only on time but early here. But this is good. This should be a long topic. So.
Yeah, we should turn this topic. We should talk about this for about 30 minutes, so we're late to our meeting.
There we go. So let's talk tariffs. Now that you and I are both geopolitical, macroeconomic correspondents, but you just cannot separate the what's going on in the macro, what's going on with the Trump administration, what's going on with all these global negotiations on tariffs from the tech trade. So for people that are out there that are sort of trying to figure out tech, so this goes back to that quote that we got from one CEO at the event, where it was basically, we move manufacturing from point A to point B because of tariffs. Now we don't know if point B is going to have tariffs. We could have a mitigation plan. We can carry through this. We can hit numbers. We can grow, and we can deliver good results to the street. But we can't do this if we don't know what's going on. So I call the trade right now, it's all an uncertainty trade. We're in this capacity right now where we just simply don't know what's going to happen next. One day, tariffs for Canada and Mexico are on. Next day, we're going to hold off for those for a month. Automakers, we're tariffing everybody starting in April. Maybe we won't do all of that. And we're just seeing this kind of going back and forth. And of course, we're seeing like kind of this Ukraine situation, the Doge situation. Like, are we cutting all these costs? Are they going to even let the government cut all these costs? There's all these sort of actions being taken within the courts to try to stop the freezing of some of these different aid payments. By the way, I listened to the whole Rogan, Elon Musk episode last night. I got a whole great teardown. If you have any time, or anyone out there wants to get a great rundown on kind of NGOs and all the waste and spending. But look, these things are all symbiotic. And in the end, what I think the tariffs are, I'm going to put this out there on the record, is I think the tariffs are one big negotiation to bring down interest rates and bring down inflation. And that's not really all that big of a bet. But Trump said he wanted, he's been pushing on Fed Chair Powell for some time to bring down interest rates. It's hard to justify bringing down interest rates when you have stock markets near all-time highs. You have assets like Bitcoin at all-time highs. You have homes still trading at very high levels despite increasing inventory. But there's also kind of a whole bunch of bad macroeconomic stuff. But the tariffs are interesting because, first of all, what most people don't understand is that we are tariffed exponentially more than most of the tariffs we send out. Even to China, as we double our tariffs, we're still paying a bigger tariff to China. When we send cars to Europe, we pay a bigger tariff. They don't when they're sending them to us. And it's weird because it feels like nobody, Pat, really knows this. It's like everybody's like, tariffs are terrible. I can't believe we're going to, it's like everybody tariffs us. Like we pay tariffs to everybody. Why is this so crazy? But part of it, when you think about like China, you think about Korea, you think about some of the threats to Taiwan. So the risk of Taiwan decided to bring some implementation R&D here. I don't think they're going to bring their biggest R&D here, but they're also planning to bring N2 here potentially. And Trump's reaction in his State of the Union report is if they do that, they won't pay tariffs. There's an incentive in that. He said cancel the CHIPS Act. We'll come back to that some other time. But the bottom line of it is that the reciprocal tariffs are really interesting because what if the reciprocal tariff says everybody's going to be paying these 40% tariffs? So what if everybody then finally comes together and says, hey, it'd be really weird, but we could bring all the rates down. Then suddenly you start bringing inflation down. And actually, what people aren't talking about is have you seen the 10-year yield? Have you seen the 10-year note? Let me see really quickly what it's at. Your yield at the 10-year has dropped by like half a point in the last, not half a basis. It's at 4.25. It was at like almost 5%. So no one's really talking about the fact that all these government spend cuts, all this tariff talk, we are seeing the number break that needs to break. That the interest rate, these are the bond markets kind of bet on what interests are going to be. And if interest rates come down, guess what? The middle of America, not the asset holders, not the people that own Bitcoin, not the people that own stocks, but the middle of America can actually start to afford things. They can afford homes again. 8% interest rates, no one's moving. People that have 2 and 3%, they aren't going to sell their house. Cars, you buy a $50,000 car and you're paying 10% interest. You're paying $5,000 a year of interest on a car. Over 5 or 6 years, you almost pay twice the price of a car. That's really hard on the average American. And we're not even talking about bananas and eggs and all the things in the grocery store. We have to beat inflation. I think what he's doing is radical. It's revolutionary. It could be really wrong. I mean, I'm not saying here it's absolutely going to be right, but I'm saying that just this endless spigot of stupidity and spending and foreign aid and sending money to places that we don't have, running a debt that we can't support and paying over $1 trillion a year of interest is not sustainable. So I'm signing up for doing something different and trying something else. But this tariff thing impacts tech. It just simply does, because whether it's moving semis, moving laptops, moving all goods, automotive, and everything else, Pat, we cannot do it. So my rant is over to you. You're muted, dude.
Thanks. Sorry, my dog walker came and my dogs were barking. But anyways, I think your idea where it all tariffs come down, I think that works with the exception when you have government subsidies, right? TSMC, very heavily subsidized. Tech companies in China, very heavily subsidized by the government, right? So it works up until a point. The one thing, though, that kind of bugs me is this idea, we gave up on U.S. manufacturing back in the 80s, right? We didn't reskill anybody. And what I can't find is a thesis where it makes sense, for example, to do iPhones here in the U.S. I mean, here's a crazy fun fact for you that China's Foxconn imports Malaysians to work in the iPhone factories. And there's reports that say there's up to 1 million people who work in these factories. Like, where in the United States have you ever heard of anything like that in the past 50 years, right? And what would it take to rebuild that? And the other thing is supply chains have to come with it, right? The 500 companies, for instance, that you have to have in place, and I'm just picking an arbitrary number, making it up, but a lot of different companies that are required, particularly in the electronic supply chain, to build a product, right? You've got PCA, you've got PCB, you've got final assembly. Heck, you want to talk about plastic injection molding and metal bending? and aluminum CNC. Okay, that takes years and years of investment, and you can't just say, "Oh, I'm going to put a tariff on it." Maybe 5, 6 years that can be established. So, maybe I'm not, me, I'm not one for nuances. I'm one for more kind of, black and white.
Certainties.
Yeah, more of that. Like, I'd like to see the full thesis. I'd like to see the full game plan. Don't get me wrong, man. I love the idea of our government getting more efficient. I love that. We grew our government over 20% during the pandemic, Daniel.
Yeah.
And we just kept spending it when the pandemic went away. Like, that is just absolutely disgusting to me. It's your money, it's our money, and that stuff just needs to change here. So, yeah, those are my thoughts on it, Bestie.
So maybe just since we have a few minutes left, and I'm sure a lot of our audience would love to hear about this, but because this all really does tightly correspond with the Intel, TSMC moving here, Apple moving here, less so, but also similarly, Apple for the 17th time has committed the same $500 billion to the United States. But it's a victory lap. People forget things very quickly. Let's hope they do build here. Let's hope they make phones here. Let's hope they build more of their PCs here. This is a good thing. And this is kind of the whole thing I want everybody to hear, at least from me, is that this is all potentially good stuff. And why is this good stuff? Well, first of all, getting TSMC to bring its most advanced node here, Pat, and I saw your tweet, is even if they are only bringing implementation R&D and not necessarily the full sort of skill set of their next generation and newest IP, we at least secure the current level of technology for the next handful of years, meaning we don't go back into the Stone Ages, effectively, if for some reason the music stopped and China invades Taiwan and they're airlifting all the systems out and they're blowing everything up. I mean, again, fatalistic potentially, but we just don't know. But additionally, competition is a good thing. And so I get the feeling like, I know Trump keeps kind of saying cancel the CHIPS Act, and this leaves Intel in this sort of weird middle, but I actually believe this is a bit of the deal thing that he likes to do is, look, I think Intel has to become the U.S. chip making champion. And I'm not talking about instead of TSMC being here and making lots of chips, or even Samsung coming around. And by the way, I think the same thing for memory with Micron. Micron needs to be the U.S. champion for high bandwidth memory, and of course, just other NAND and traditional memories that we don't talk about that often anymore. But we need competition. Like, it is a monopoly right now. We have one company controlling pricing that has capacity limitations. They're controlling CoWoS. They're controlling leading edge, 2, 3, 4 nanometer. They're mostly sold out for multiple years. This is leaving very little capacity, and it's giving them endless control over pricing. We don't want monopolies. Monopolies create price inflation. You want to get rid of price inflation? Don't have monopolies. So in some ways, like, maybe, yes, cancel some pieces of the CHIPS Act, but I actually think fund Intel. Bet big. But also just know it's going to take some years. Even if they get the situation right, the governance right, the wall between products and foundry right, they get the people hired in, maybe TSMC takes a small stake, like you've suggested, brings some of its talents to it to create extended capacity, competitive processes. They can make the AI parts in different foundries, different fabs at different scales across the US, and then can obviously take this to Europe, take it to other parts of the world, so that we're not so dependent on one company in one location doing everything. This is a good thing. We should be egging on more investment here, more manufacturing here, more guarantees that we are securing the national future of this company, this country, and our companies, this country, and of course, maintaining economic leadership. Economic security is national security. We do not have economic security here, Pat, as long as we can't make enough of the chips we need to support our businesses and commerce, and then of course our defense industry.
Yeah, a couple comments. So just to review, foundries create two things. They create intellectual property around transistors, and then they make chips, and of course they package it, but a lot of that packaging is outsourced. And they all have to come together. Scenario would be that TSMC invests that $100 billion, builds the factories, and let's say, we're on 2, and then the follow-on. If China invades Taiwan, essentially the shot clock time stands still. All we can build on TSMC is the intellectual property that's currently out there and being produced. And today, CC, the CEO and chairman of TSMC, basically put the true colors out there. I love it. He says a lot. I don't know if he knows how it can rubber band or boomerang back, but he essentially said, hey, don't worry about this whole thing. We've got 10,000 of our best engineers still in Taiwan, and we'll have 1,000 in the US. Essentially, those 10,000 people will be IP creators and implementers, and then 1,000 here in the United States will be implementers of that IP created in Taiwan. So the Earth would probably stand still for 2 or 3 years, where nothing would move forward. Now, here is the other scenario that I've been thinking about, okay? And call me crazy. By the way, tell me on social media if you think I'm nuts here, but let me lay this out. So a lot of the core machines from ASML and Applied Material, Tokyo Electron, a lot of the stuff that you see when you go through a foundry are the same machines. You could hypothetically run an Intel transistor inside of a TSMC factory here or foundry here in the United States. And by the way, AMD, Apple, NVIDIA, Marvell, Broadcom would have to obviously spend a lot of money to build those designs and that flow for that Intel process. So maybe the world wouldn't stand still for 2 or 3 years, but maybe 1. Now, if it gets really heated, the U.S. government should, let's just say the CHIPS Act goes away, pay the designers enough to put their designs to create a product that could go into Intel 18A and beyond. That would be a very nice hedge and insurance policy. It doesn't cost $500 billion. So anyways, I was working out and was thinking about how that would work. Tell me on social media if you agree, or if not, that's okay too.
I don't agree with you on much, Pat, but I actually have been saying for a long time that a lot of this can be solved with policy. And the fabless may not like being told they have to produce a certain amount of their chips, but this is actually one of the true cases of real national security, is making sure that survives. And like I said, I don't know if that means some sort of additional levels of security of how IP is protected between products business and the foundry business. I'm not a huge fan of the breakup idea. I think there's more value in the company staying together, but I do think there could be some very strong kind of church and state that is set up to make sure that is absolutely protected, and that there's a huge amount of liability. I'm sure something could be done with the blockchain, with IP or something else to absolutely make sure it never gets into the wrong hands. But hey, there's a lot here, a lot to be said, a lot of unknowns. Pat, have a wonderful day, buddy. Any last words before I shut this thing down?
No, I think it was a pretty good show. I don't know how we went through there. We need to be jet lagged more often. I think it was that leg day I did. Did I tell you I love legs now? Now that I can't do upper body.
I'm really not sure how to take this though, but legs are the absolute best and the worst. I love all those videos on like TikTok that show like me doing leg day, or how to do leg day, how to have fun doing leg day, and it shows like somebody like going over starting a Bulgarian squat on a bench.
Yeah.
And then putting down the weight and turning over and then like doing bench press. It's like, I mean, I see those videos all over because Legs are painful, but for everybody out there, this is the Pat Moorhead fitness corner. Is legs are the largest muscles in your body. You build your legs up. It builds hyperspeed to your metabolism. It builds your strength. And of course, those compound lifts are great for your body and your core. Some of us, still chunkers, but I'm working my way down, buddy. I'm going to be ripped like you pretty soon. This is the year.
If you ever noticed, Dan is cutting and his face is looking very thin, but he's keeping the guns. He's keeping the guns, man. Your midsection is getting tiny too, and you may or may not have shown me your six-pack. So.
I may or may not have one. We'll have to do a great reveal. Everybody out there that loves our pod, I think it could destroy the network if we start doing shirtless gym pics. So we're going to go ahead and keep doing with our shirt on, unless you want to give us an overwhelming response that you really want that, and then maybe we could be convinced. But hey, for everyone out there, thanks so much for tuning in. We very well may, if not this week, the next week, be moving to our new format. We're very excited about it. It looks great so far. But for the 252 episodes of this show, for Patrick Moorhead and myself, thanks so much for being part of our community. Subscribe. We'll see you all later. Bye-bye.